joined by 4 Australian ambassadors on the African continent. We have with us Gita Kamath, High Commissioner to South Africa. Gita, thanks for joining us. We have Ambassador Glenn Moules, Australian Ambassador to Egypt. Glenn, thanks for joining us. We have Ambassador Peter Doyle, Ambassador to Ethiopia. Thank you, Peter. And we also have Michael Kutz, Ambassador Designate to Morocco. Thank you for joining us, Michael. We have a wide-ranging panel right across the continent, in all corners of the continent, in fact. Peter, can I start with you? Ethiopia has been one of the real success stories of the African continent in the last decade. But as with any country in the world, it's had to tackle a pandemic situation in the economy. How has the pandemic altered the Ethiopian government's approach to economic development and its policies around the future for the country?
Yeah, thanks, Dominic. Could I start by just saying thanks very much for the invitation to join you. I mean, Africa Down Under is such an important event. COVID's affected so many things, and I'm missing Perth, actually. So I know that a lot of you will get together in Perth, but those of us who are overseas, we have to make do with a virtual connection with you on this occasion. You're right, Ethiopia's done really well over the last decade or so. And COVID's had a real impact on the economy, of course, as it has in all economies. There'll still be growth, maybe I think around 6% in the current financial year, and then it's expected to bounce back even better next time. I just want to make an introductory point about Ethiopia. As you said, it's experienced good growth, but it really is a country in transition. So both politically and economically. When Prime Minister Abiy came to power in April 2018, he really instituted for the first time reforms that are putting Ethiopia on a path to being a real true democracy. And he wants the country to become an open economy. So there's lots on the economic reform agenda as well. The government and the Prime Minister have a really high level of ambition of what they want to achieve. And so there's plenty of activity at the moment. Obviously, there's some challenges. Not everything is going to be working smoothly. When you want to make really rapid change, major rapid change, there's going to be some hiccups along the way. But it's a really exciting transition journey that Ethiopia is on at the moment. Thanks.
Thanks, Peter. Gita, can I turn to you now? South Africa was probably the hardest struck of the African countries in the first wave of COVID. Has the government had a chance to come up with a post-COVID recovery plan?
Hi, Dominic, and it's good to be here. And like Peter, I do wish I could be there in Perth this year, but hopefully next year. Look, yes, when COVID struck, not only did South Africa go into one of the world's strictest lockdowns, but the government announced a very strong stimulus package, which at the time was 500 billion rand, although there are some economists who question how much of that was new money. And very recently, in the last week or so, the government's announced a new economic reconstruction and recovery plan. The centrepiece of that is a large-scale infrastructure rollout using locally made materials like concrete and steel. The aim is to build a pipeline of projects that will adapt the existing procurement frameworks to enable public-private partnerships and unlock funding. And interestingly, rail infrastructure will be open to private sector participation. At the same time, the government's extending the COVID special grants under the stimulus package that was for the most vulnerable communities. It's also going to embark on a major employment stimulus program, creating 800,000 work opportunities in areas like public works and education. It's also said it's committed to halve the time required to obtain mining, water and environmental licenses, streamline the visa system, license high-frequency spectrum to improve broadband access, and fast-track licence applications to enable independent power producers to generate electricity. So some of those announcements are not new, and the target is to achieve 3% annual growth over the next decade. In South Africa, getting to this point involves what they call social compacting. So there's a lot of discussion with organised business, the union movement and social partners who have all committed to supporting the government. But the key question in everyone's mind will be about implementation and execution.
Thanks, Gita. Glenn, can I turn to you? I mean, we don't really see a lot of headlines outside of South Africa, really, on the African continent about the economic impact of COVID on the continent. What's been the situation in Egypt?
Well, again, like my colleagues, just like to say it is great to be involved in Africa Down Under again. And again, a shame we're not in Perth. It was very enjoyable last year, and hopefully next year we'll get back there. Look, Egypt, going into the pandemic, I think the thing about Egypt was it was probably one of the best performing economies in the MENA region, and that was due to an IMF-supported reform program. And that's after many years of low growth following the 2011 revolution. So we had economic growth of around 5.5%, and primary inflation for the first time in a long time had dropped down to single digits. Now, these were all big achievements, but what it meant was that Egypt entered the pandemic in a good macroeconomic position, and foreign reserves were triple what they were previously, inflation was down, and debt levels had fallen. So when going in, it was in a good position, but obviously, like everywhere, it's been badly hit. Tourism has fallen considerably. I mean, there's no tourists here at the moment. Remittances have also fallen. Revenue from the Suez Canal have dropped a bit, and obviously hydrocarbons have also taken a bit of a hit. But what has happened is the government has responded well. We never went into the lockdown that other countries in the region have gone through, and the size of the informal economy helped it kicking over. So going forward, Egypt is one of it signed an $8 billion deal with the IMF, which has given it a greater financial buffer, and it's the only country in the MENA region, that one of the very few in the world, I noticed Ethiopia is another one, that is looking at real GDP growth for this year, and we're looking at around 2% for 2020. Now, that's nowhere near as high as it was, but in the context, it's still very positive that they can record positive growth. And I think the other thing is that, like in South Africa, it's given them a chance to sit back and have a look at what they need to achieve. So we have seen, for instance, Egyptian authorities allowing online lodgement of export and import clearances, which has made bringing in, importing and exporting goods a lot easier. And we're looking at longer term benefits. There's been a big move to further digitalisation of the economy, and a big focus on e-commerce. As well as increased industrial activity, drawing on its very strong manufacturing base, and also its geostrategic location. I mean, it links Asia, Africa, and Europe. So despite the problems, I think Egypt is looking at the opportunities that have created by the pandemic and take advantage of those.
Thanks, Glenn. Michael, can I turn to you? Morocco, perhaps of any country on the African continent, is more attuned to what's happening in Europe economically, is more reliant upon what's happening in Europe than anywhere else on the continent. What effect is the pandemic in Spain and Portugal and Italy and other European countries had on Morocco, and has it been able to establish its own path out of the pandemic?
Yeah, thanks, Dominic. And as all my colleagues have said, it'd be great to be down there. This would be my first occasion. As I mentioned, I'm just home designate at the moment, and looking forward to having having that proper status in a few weeks' time, and getting down to see you guys next year. But yes, you're right. The European Bank for Reconstruction and Development has forecast a 2% drop in GDP this year for Europe, for Morocco, and that's obviously due to the close economic relationship that Morocco's got with both Spain and France, particularly where most of their exports go. So that's what's predicted this year. But the pathway out, yeah, they're talking that the same Reconstruction and Development Bank is talking about a 4% growth rate next year. They, as Gita said, they went into a really strong lockdown back in March for about 3 months, and then once they re-emerged, they've had some resurgence of cases, and so there's no question though whether they'll continue to whether they'll go back to shutting the country down or not. The sorts of economic stimulus packages they've implemented, similar to what Glenn's told us about Egypt and what Gita's mentioned in South Africa. They've thrown money at investment projects that will seek to boost employment in the first instance, and they've really started to throw some money at the tourism sector again, which accounts for normally around 11% of their GDP. So you might have seen in the press they were bringing Ryanair flights in from Manchester, even though Manchester's a bit of a hotspot itself, and into Casablanca, which is the hotspot here in Morocco. But no, they were just announcing this week that a number of flights had, around Europe again had been opening up again thanks to Ryanair. So they're throwing all the money at it, and it looks like next year they are in good prospects. But yes, living here on a day-to-day basis, you go out with your masks on. We're working from the embassy again. We had a case, and so yeah, so it's the economic implications are obvious. But when you go out on the weekend and you go to the shopping malls and you go to restaurants, they're pretty busy still.
Great, thanks, Michael. Peter, can I turn to you? You mentioned previously about the strategies and the policies for refiring the economy. Is there particular sectors and industries that the government is keen to fuel and use as a key driver of the economy?
Well, I think in this context, of course, it's really important to mention mining, and mining is a key sector. The government realises that it's really underdone mining a little bit. And so this was a pre-COVID realisation and objective. So that certainly really has stayed on the agenda and is really remains a priority. There was a minor ministerial shake-up a couple of months ago. So in August, I think it was, we got a new minister with a passion for getting things done. Other sectors, as part of the reform process here, they're looking very closely at a lot of the enablers across the economy. So, of course, things like energy, ICT, finance, logistics, of course, are ones that have an impact on all sectors. So they remain priorities, and the government's working very closely with the World Bank on how to restructure and how to sort of put some real vigour into the economy through improvements in those enabling sectors. Of course, most Ethiopians are farmers still. So agriculture is, of course, a key sector and will be for a very long time. And then light manufacturing, of course, is also important. I mean, the government's done quite well in attracting foreign investment into its industrial parks, which then produce a wide range of goods exported primarily into Europe and North America. So that's probably it in a nutshell. But I hope I'm sure we'll get a little bit more of a chance later to talk a little bit more about mining.
Well, let's talk about that now, Peter. Many African countries. Are they promoting that it both encourages investment or otherwise?
A very good question, and one that would take quite a while to answer fully. So this will be a very condensed version. Look, Ethiopia's at the early stages of this journey. Gold was mined in Ethiopia 3,000 years ago. So mining's not new, but modern mining hasn't really happened yet. So Ethiopians know Australia's reputation as a world leader in mining regulation as well, and environmental standards, and the whole package. And so they're trying to like they're doing in the economy overall, they're trying to do a lot in a short space of time. So from a very low base to put in place a policy, legislative and regulatory regime that will make sense. They know, as you mentioned in your question, they know the high degree of competitiveness to get investment into mining. I mean, at all times, but I think, particularly now. So they're very cognizant of that, and they're looking elsewhere. They look to us, of course, but they also look to other countries on the continent which seem to have been more successful, to have been quite successful, and have got into mining a bit early. So they're trying to put all of that together. Now it's not always, again, like any major reform process, not everything's working smoothly. You mentioned that point about, you put it more diplomatically than I'm about to, of, economic nationalism. And it's a real thing here, because that's what governments have always been. And so to try and get that balance right of how do you partner with the government, but also with the private sector here in Ethiopia, and how do you make sure that the benefits flow down to the communities as well? As we know, Australian companies have got plenty of practice at that. We think we're pretty good at it. But it's something, it's new for Ethiopia. How do you manage that? They've also got a relatively young and complex federation model, which is also changing. So that whole dynamic between the centre and the states, which we went through some time, well, maybe some would say we're going through again in COVID times in a different way. But that whole relationship between the central government and the state governments, and how that gets managed, and who's responsible for what, and who gets the chance to invest in what, that's also evolving at the moment. So, yeah, it's early days, a complicated process, but a new minister who's really keen to take that forward, and a government that really recognises that mining is a great opportunity, which has been seriously underdone, and that they now need to address.
Thanks, Peter. Glenn, can I ask you, Egypt's in a very similar position. It has got one fantastic gold mine there in Sakari. Is the government conscious of this? Is it looking to rectify this, or is the status quo how it will continue?
Yeah, no, it's a very good point. I think what happened for Egypt is that it was focusing very heavily on the oil and gas sector, as it was keen on becoming an oil and gas hub. It's one of the biggest oil producers in Africa outside the OPEC countries, and the third largest gas producer on the continent. And it's also trying to position itself as a regional gas hub. So what you saw, the government and the mining industry is within the Ministry of Petroleum and Mineral Resources, and the government was very focused for the last 15 to 20 years on building the gas industry in particular in the country. And that meant mining was sort of left, it wasn't given the attention it deserved. And Centamin was the one company that was able to get through the red tape around that and actually make a presence here and start a successful operation, which is still going. And when you speak to the government, it's obviously been a huge advantage to them. But recently we have seen the government finally look at bringing in some of those reforms that it needs if it's going to attract foreign investment in the minerals sector. And it's one thing we keep saying to the government is, that Egypt has a lot of unexploited resources: gold, zinc, copper, mineral sands, and silver. And as Peter was saying about Ethiopia, they have been mining gold for a long, long time. I mean, you just have to go to the museum here to see the gold that's in Tutankhamun's mask to realise that they have been doing this for a long time, but they've let it drop. So what we're seeing and what we've been saying to them is this is an incredibly competitive field. You need to make sure that you have the regulations and regime that's in place to attract mining companies, not just Australian, but other mining companies as well. And I think they've taken that on board. So last year we saw the Parliament approve amendments to the Mineral Resources Law, and we thought that was a big positive start. And then earlier this year, we saw the executive regulations which are associated with that law come out, and that sort of actually filled in some of the blanks that we had. So what we're seeing this year, and this is all since January, streamline in license processing, the removal of maximum size constraints for concessions, eliminating the need for miners to form joint ventures with the Egyptian government, and limits on the production royalty range to between 5 and 15%. So, as you know, previously we had a situation here where it was they had a situation where the revenues were actually based on a petroleum model of sharing revenues, which wasn't working for the mineral sector. And so they moved away from that. And we're now seeing a lot of interest from some of the junior exploration companies coming in here. So, yes, they have finally woken up to what they have here and the potential in the mineral sector. And we are finally seeing some positive reforms. And I think we'll see more and more companies come in. Already this year, the ministers announced that in July that they've already seen they're expecting $400 million of investment in the sector in the next 2 years, and hopefully another further billion by 2030. Thanks,
Glenn. I know, talking to a number of junior explorers here in Western Australia, they're fascinated by Egypt and in fact that entire region, and they're desperate to get in given the opportunity. Gita, can I turn to you, because the situation in South Africa there is very different. Rather than a long neglected sector, most international headlines would suggest that it's a sunset industry in South Africa that's never quite managed to, that's fallen away from its position at the top of the perch. Since President Ramaphosa came in, has the government's attitude towards attracting investment into the South African mining sector changed?
Yes, look, I mean, South Africa has a mining minister, Gwede Matashi, who worked in the mines previously, so he understands the industry. He's supportive, but the key thing for that business is looking for in South Africa, and it's not just in the mining sector, it's more broadly to get confidence, is policy and regulatory certainty, and also a clear sense of the state of the government's financial circumstances. So, because what we've been seeing, and this is pre-COVID, is rising debt and stagnating revenue, and so they're two things which are needed to address business confidence. And another key issue which really affects the mining sector is energy security. So, even pre-COVID, there are significant issues with the state monopoly-owned electricity company Eskom, which has an unsustainable balance sheet. The government has embarked on a restructuring of Eskom, which is currently at the first stage of reform. But what we've been seeing, even during COVID, when we had lower level of economic activity, is significant load shedding, and that has a huge flow-on effect, hampering manufacturing, mining production, and economic growth. So these are key issues which were actually pre-COVID and which need to be addressed post-COVID. In terms of regulatory certainty, in August, the government withdrew its legal appeal to the Mining Charter 3. This was about the provisions around once empowered, always empowered. So that was a positive step in terms of policy certainty. But at the same time, South Africa at the moment only attracts about 1% of global mineral exploration spend. And I think that compares with something like 17% for Australia. So when you consider its mineral endowment, it should be doing better than this. So I guess the key question is COVID going to be a catalyst of change for South Africa's underperforming mining sector? Will it, be prompting the government to implement more reforms, boost business confidence? And next month, the government's going to hold its third investment conference. This time it will all be virtually, but this may provide the platform to see what this means, not just for the mining sector, but more broadly.
Thanks, Gita. Michael, can I ask you, Morocco's mining sector has been dominated by phosphates and the production of phosphates from a state-owned company. What's the government's approach to minerals exploration and minerals investment more broadly? Is it a sector that the government would like to promote?
Well, certainly the new minister's very active in that, and hopefully he'll accept your kind invitation to participate. We haven't heard back one way or the other yet. But yeah, certainly to pick up on that point Gita was making at the end about the certainty, they've gone to and they've changed the regulations so that once a mining company has got the permits to explore, they can keep that indefinitely and/or until the resource is exploited, which is very important, because up until then they had one where you could either use it or lose it sort of framework. So that was a really important development. Some of the other developments that I've got here, there are customs duties and tax exemptions on imported equipment. There's a corporate tax rate of 15% for export of destined products from mining activity. And on some of the really big ones, depending on what part of the country they're in, they can benefit from a 50 to 70% co-contribution from the government. So certainly they've been trying to modernise the sector. But you're right, the OCP, it's called, it's a major player, and one in this part of Africa that it's expanding into sub-Saharan Africa itself, looking for joint ventures with a bunch of countries. And so I think a lot of the countries around the region, a lot of countries on the African continent will be seeing OCP and/or its offshoots in joint ventures. Morocco liking to now characterise itself as the second largest investor in sub-Saharan Africa, that sort of thing. So it's looking to expand. It's looking for partnerships. That's the message I always get here. We had Worley Parsons, that big Australian firm. They're in a 50-50 joint venture with OCP and a firm called Jessa, and that's an enduring firm that Jacobs. That previously the American firm Jacobs that took place last year in 2019, and they're really actively looking for opportunities across the board. You think of mining and renewables. They've got a big project in Djibouti. So the perspective, and they realise they've got to diversify. But yeah, that's and they're certainly welcoming investment. But what I was saying right at the outset, and I think was picked up a bit by Gita's for South Africa, those stimulus measures, those economic recovery measures right now are aimed at getting people back into the streets and getting people back into work. So they've got a real domestic focus. You could, as Peter was saying, you could describe it as economic nationalism. I see they're putting up some tariffs on some products to protect their domestic interests, and without shamelessly doing it as well. And they also renegotiated their free trade agreement with Turkey because Turkey was getting too much of a good deal out of them. The Turks agreed. So there is certainly that flavour here, but that's not surprising given the impact right now. But that's a separate story, I think, from the one around mining and trying to encourage investment.
Thanks, Michael. Earlier this week, I spoke to Bronte Moules, Australian ambassador to Zimbabwe, and this is what she had to say about the business climate for investment in Zimbabwe.
Well, I think in terms, and that's one thing I'd say about the more nuanced picture, is that the positives about Zimbabwe are still there, the sort of enduring positives, and that is its natural resources wealth, which is pretty well known, and its human capital. So they're positive, they're enduring. And on some other issues, we're seeing, despite, as I said, a myriad of challenges, we have seen some encouraging signs, at least, in terms of the issues that, as you say, frequently get raised by potential investors, people interested. One is on the currency, which has been very volatile, and repatriation of profits has been a big challenge. But one of the things that's brought some potentially positive is I think it was in June a few months ago, a foreign currency auction system was introduced. And so far that's brought some stability in terms of the currency and prices. So that more predictability in terms of access to currency and more predictability in prices is something that's had a positive impact so far. Now, I'd say obviously we can't predict where that's going and how long it would last, but on that currency point, it's looking a little bit better in the last few months than it has before. And as you say, that's been a big concern to companies. And another issue that we get asked about a lot, and I know the Zimbabwe Minister for Mines, when he's come down to ADU in the past, has got asked about a lot, is the reliability of power supply. Obviously a big key issue for companies and for mining companies especially. And there is a lot of work going on to increase power generation in Zimbabwe. It's something the government's taking very seriously. Their ambition is to be a net exporter of power by 2023. That's the government's objective. Now, whether or not that happens, obviously I can't predict, but it does show that there is a lot of extra effort going into this issue, which is of direct concern to investors.
Glenn, can I ask you, as we mentioned, there's been only a little bit of Australian mining investment in Egypt and in the northern region of Africa, full stop. What would your advice be to Australian investors who are looking at Egypt and elsewhere in the region, but Egypt in particular, about investing and taking on projects in the region?
Look, I always say both from Egypt and from Australia, both markets look a long way away, and Egypt is often seen as a long market that's difficult to enter, fairly bureaucratic. But there are a lot of advantages, you know, and the key one is the population. You're looking at a population, we've just ticked over 100 million people. It's the largest country population-wise in the MENA region and the third largest in Africa. And to give you an idea, just to stimulate economic growth, it has to create 700,000 new jobs a year just to stay even with population growth. That's a huge amount of jobs that it needs to create just to ensure that it can provide employment for its population. So the government recognises that, and it's looking to encourage investment across a range of sectors. Now, they could probably do more, but nonetheless, there's big opportunities with that rising population in the retail sector, and we've seen some companies here come into retail services and, of course, food imports. It's a major food importing country. We've talked about mining, we've talked about oil as well previously, but construction, you know, that grew at 15% on average since the 1980s, and that's an area where we can see further growth, and we will. I mean, they've got huge projects here. I was just up at the north coast at Alamein, which is a massive construction project, and we've got the new capital as well. Education is another sector. The government's eased the path for foreign universities to set up branches and forge partnerships here. And we've already seen a couple of foreign universities striking partnerships or looking at opening campuses themselves to service the Egyptian market. And it's a huge market, and we could do a lot more here. There's 32,000 Egyptian students studying abroad 2 years ago. So that's an avenue for us, but also setting up partnerships here with universities and health sector as well. You're looking at water resource management, agricultural production and food processing. So there are opportunities here. You need to do your due diligence. You need to come and investigate the market. And it's not the easiest market to work in, but I always say, provided you do that due diligence, you can take advantage of those opportunities.
Thanks, Glenn. Michael, turning to you now. Australian companies, particularly mining companies, are probably quite comfortable operating in sub-Saharan Africa now, you know, from Burkina Faso to South Africa, but perhaps less familiar with North Africa. What's your advice to Australian companies looking at investment opportunities in Morocco?
Nick, yeah, well, as I said in response to the last question, there are some great opportunities here, and I think the Worley Parsons example is a good one. Try and find a local partner in the first instance to see how you're going. That was Costa Group, the big berry firm in Australia. They did the same route. They identified a local partner and eventually they bought them out. So certainly there are lots of opportunities. Taking Glenn's description of some of the opportunities, when we think of Morocco, we think of tourism and we think of mining, of course, but they've also got that massive free trade zone down in the Tanger Med, which recently became the second one of the, according to I think it was the Financial Times, one of those reports mentioned was the second best one in the world. And when you go down there, you just see how the high-end production of laboratory manufactured goods is. It's the cars, pharmaceuticals, aeronautics, often for European subsidiaries, but there's that whole space as well. And so if you're looking into that particular area, you've got a great opportunity there. But coming back to the mining and things like that, I think the main ones are, and Australia's got a fantastic reputation here. Again, Glenn mentioned the relationships between the universities. Moroccan companies look to Australia around the ag, the irrigation, and the mining sector there. So we've got an automatic entree. If you're an Australian firm with a bit of a track record and you indicate an interest and you start trailing your coattails there, you'll have an automatic audience to actually look at your offer.
Thanks, Michael. Again, I was speaking to Bronte Moules earlier in the week, and this is what she had to say about the investment opportunities within Zimbabwe.
Look, right now, I think it's probably as difficult as it's been in my 2.5 years in the country. Difficult to predict, I should say. I think, you know, the trajectory was fairly uncertain at the start of this year, but now with COVID complicating everything globally, I think it makes everything that much more difficult. It's just added to the pressures on government and industry. So there's some path forward for that is even less clear. I think so. I think now, in terms of predicting, there are points during the last 2.5 years that I've been there that I would have been given a more confident assessment, I guess. But it's extremely difficult to do at the moment because of these many challenges and sort of pervasive problems, and where it's all headed is really hard to say. I would say, though, that as I mentioned before, the fundamental positives about Zimbabwe, which are well known, which are its resource base, which is still so unexplored. I mean, there's been a bit of Australian interest in the oil and gas sector in the Zarabani Basin area, which is looking pretty promising, I have to say. But there are 5 other potential oil and gas basins, so that's just on that side as well as the well-known minerals. So that's still there, and the human capital is kind of against the odds, given the pressures and the challenges that the country's faced, including on the education system. The human capital is still pretty extraordinary. So those pervasive fundamentals, I think, are very strong, which comes down to that point that applies to I guess, quite a few countries, not just in Africa, but particularly in Africa maybe. It's the risk appetite, having the risk appetite and having a long-term objective. I think they're really more so than in other contexts. They're prerequisites, having that sufficient risk threshold, but the long-term view, and like in many contexts, obviously having the local representation on the ground, having the local knowledge is what we would advise.
Thanks, Bronte. Peter, can I turn to you now? Again, Ethiopia is a country that's got a very diverse economy, as you've already mentioned. When Australian companies come to Addis and ask you for advice, what advice are you giving them?
There's not all that many. So it's I go back to one of my key themes, I suppose, about it's early days. So with an economy in transition, but that wants to achieve a lot in a short amount of time, there's a bit of churn at the moment. So the sectors that Australians have been most interested in, of course, mining is number one. And number two is maybe energy, particularly is renewables. After that, look, honestly, it falls away a little bit. Things that Ethiopia is particularly interested in, like manufacturing, like lower capital, higher labour inputs, that's obviously not our thing. So there's limited opportunities there. But on the mining front, I think what's going to be really key is the demonstration effect of one success, basically. So we haven't quite got there yet. There's a lot of Australian companies sniffing around, and there's a lot who've been trying to get a mine up, but it hasn't. We're not quite there yet. And I think that's the sort of key. That's one of the key conversations I have with government officials and with potential investors, is that it's going to be really important just to get that first sort of show up and running, if you like, and then I think it'll take off, particularly in gold, but not just gold, and renewables as well. I mean, energy's a key sector everywhere, of course, and there's huge unmet demand. Actually, a lot of what Glenn said is equally applicable to Ethiopia. And those challenges about a young population, having to generate employment opportunities, having to all of those cross-economy sectors that need investment, that need foreign, not just money, but expertise in how to sort of facilitate growth and underpin growth. So renewables is probably the other key one, where, of course, huge amounts of money potentially. And I think Ethiopia is going to move. Well, it really wants to move away from state-owned monopolies basically controlling all sectors. It realises that in energy and in particular, that's not going to work. There's not going to be the scope for the supply to be generated that the economy is going to demand. Agriculture, of course, is another one. I mean, when you look at Ethiopia, you know, when I go out to places, they look a lot like a lot of parts of Australia, and you see, you know, but basically a lot of it's still subsistence farming. So there's huge potential there, and in grains, but also in livestock, for instance. So I think further down the track, that's a sector that that's going to get a bit of attention.
Thanks, Peter. Gita, South Africa and Australia share so many common interests, both economically, culturally, but there's obviously still some big differences as well. What's your advice for Australian investors looking at South Africa as an investment destination?
Well, look, it's the most industrialised economy on the continent. It's got a strong manufacturing base. Its biggest export to Australia is cars. We don't even make cars anymore in Australia, but they're being made here in South Africa. It continues to have some world-class fundamentals operating in its favour, particularly its financial architecture. It's got a world-class banking sector. It's got the rule of law. Its stock exchange is the 19th largest in the world in terms of market capitalisation. It remains a hub for corporate Africa. It's got the whole hinterland of continental Africa as a market when the African Continental Free Trade Area comes on stream. But there is huge competition for investment internationally. And one thing that it's really struck me is also there's a lot of domestic investors in South Africa, and they're also looking to Australia to invest. So there are real opportunities, but as my colleagues have said, you know, I think due diligence, having a good partner, you know, understanding the local operating environment. And a good way to do that is through, you know, diaspora connections. So South African Australians are now the 7th largest diaspora group, migrant group in Australia. So there are a lot of South African Australians in Australia who've got experience of doing business in South Africa. And that's a good entree. And we've also got a couple of business chambers, which I would also recommend people explore as networks. So the Australia Africa Chamber of Commerce, Melbourne-based, has some very dynamic South African Australians on its executive who've got good connections to South Africa. We also have a very dynamic chamber here in Johannesburg, the Australian Business Chamber of Southern Africa, with Australians on that board. And we've got a new chair who's an Australian South African businesswoman. So that's another thing I'd suggest. We see Australian companies in lots of sectors here. Renewables has been mentioned, so Australian companies building solar and wind farms here. Retail, Cotton On has its biggest store in the world in Africa. Why did they come in here? Because they had a South African come and work for them who helped them come into South Africa. So that underlines the importance of those diaspora connections. So there are opportunities, but there's also opportunities to attract South African investment into Australia, and we're also seeing that happening as well.
Great, thanks, Gita. Well, unfortunately, we've run out of time in this panel session. Thank you so much, everybody, for signing in and logging on and joining us remotely. It's, as you all said, it's such a shame that we can't be together in Perth, particularly as we're having a conference in November this year, and the weather is much more accommodating than it is in September, usually when it's raining heavily. But thank you for joining us, and hopefully we'll get to see you all in person in 2021. Thank you.